We're going to talk about public and private accounting, and we're going to answer two main questions. What is the difference between public and private accounting? And number two, which one offers the better long-term career? And to do that, we're going to break down this video into the education requirements, the differences in the work, busy seasons, being the product versus the byproduct, long-term careers, which pays better, and stay to the end to find out my opinion on the topic. All right, let's dive into this. What exactly is public accounting? Public accountants offer a wide range of services, which include audit, tax, and consulting, and they provide them to various clients in many different industries. What is private accounting? Private accounting, also known as corporate accounting, involves managing the financial records and operations of a single company or organization. Private accountants work internally within a business, which includes month-end financial reporting, budgeting, financial analysis, and anything needed to support the business. I've worked in both personally, but I've spent the majority of my career in private accounting, but I did get a little taste of public accounting. But even working in private accounting, you are always working with the external public accountants, whether it's an audit or tax preparation, they go hand in hand to a certain extent. All right, let's talk educational requirements for public accounting. Ideally, and it's pretty self-explanatory, it's ideally to get an accounting degree. Not because you need an accounting degree, you can learn accounting without an accounting degree, but you need core classes to sit for the CPA exam. So let's talk about the CPA exam. The CPA exam, as it sits right now, and it's changing, you need 150 college credits to sit for the CPA exam. Now, there are states that are dropping that to 120, but as of this video, you need 150 college credits, but if you watch this a year or two down the line, you might be in that 120 territory. Now, the CPA exam is made up of 4 exams that you need to pass and get a 75 or better. You also need to pass ethics. Now, even if you pass the CPA exam, there are states like the state of Maryland does require 2,000 hours of industry or public practice to finally get the CPA license. You actually need to get a CPA to vouch that you have worked those 2,000 hours, sign off, and then finally you can get your CPA license. That's after passing 4 exams, ethics, and getting the core hours you needed for the licensing. It's going to take 1.5 to 2 years to get your CPA license. Now that's public. For private, again, accounting degree is a big plus, but it's a little easier to get away in the private accounting without an accounting degree. If you have a business degree, a finance degree, heck, if you just have general studies, you can learn accounting, and private industry can teach you how to do accounting. Now, if you have an accounting bachelor's degree, you come in with that, it's going to be a lot easier having that background information, and honestly, it just looks better on resumes when you're looking for future jobs. Now, a CPA designation isn't needed for private accounting. However, I would highly recommend getting your CPA license. Even if you go to private industry, it's going to look good on your resume. It's going to make you better understanding the foundations. I highly recommend still sitting for the exam. Now, with private industry, the key aspects, the most important things you want to learn the industry accounting. What company you're working for, what are the industry accounting standards for that company? And also, you want to learn how the business works. If you can understand how they make money, how they make sales, how they produce things, then the accounting will make a lot more sense. So 2 core things when you start getting into private accounting from an educational standpoint, past college, is you want to learn the industry accounting and you want to learn how the business operates. All right, let's talk the work. What do public accountants actually do? It's going to get broken down into 3 buckets. Again, it could be more than 3 buckets. Generally speaking, it's 3 buckets: audit, tax, and consulting. Now, if you get into audit, the size of the CPA firm and the size of the company under audit are going to have significant influence on what you learn and how many clients you end up working on. If you're working at a big 4 accounting firm, KPMG, EY, Deloitte, PwC, you'll be working on large companies that have a lot more nuance and complexity. If you're working at a local CPA firm, you're more than likely work on smaller, mid-sized businesses. Now, they might have complexities as well, but you're just going to get a different experience from a large corporation versus a medium to small business when you are auditing those clients. When you get into a public accounting firm, and you're working in audit, you're generally going to be assigned to an audit team and work on a client engagement. There's going to be a team of people. Let's just say you're a staff accountant coming on board. You're getting assigned to your first audit team. A typical audit team is going to look like a staff accountant, a senior accountant. You'll have an audit manager, and then you'll have an audit partner on that engagement. That's a fairly normal looking audit engagement team. Now, there's probably a lot of variations of that, but that's just a kind of general standard audit team and what it looks like. The audit team will perform audit procedures and ultimately form an opinion on the audited financials. Audit teams will also handle other engagements such as reviews and compilations. I have a video that I'll link below that goes over the difference between a review, a compilation, and an audit, so you can get a better understanding what those engagements entail, because they are all very different depending on what engagement you are working on. Now, tax, a little different. And if you're a staff coming out of college into a CPA firm, you might work on audit and tax clients as well. They want to get you exposure to see which side of the business that you prefer, what you like. And usually if you're going to stick in public accounting, you're going to go one direction. You're going to stick with audit, or you're going to stick with tax. And that will be your career trajectory, depending on that decision. Tax engagements, similar to an audit engagement, there's going to be a tax manager, a tax partner. They're going to assign you clients to work on. That could be 1040s, that could be large multi-state corporate returns, it could be state compliance. It really depends on the firm, and it really depends on the clients and industries that you're working with, and also what the CPA firm's expertise is in. Once you gain enough experience and expertise, you'll work your way up and start working directly with tax clients and running tax engagements. It's very similar to audit as well. Once you start working, if you stay in public and work your way up the ranks, you're going to be a senior, then you'll be an audit manager, and you'll start running your own audit engagements. Consulting, now coming out of college, this is not an area you normally start in. Consulting, you need a solid foundation and you need experience to do consulting engagements. And consulting include outsourced private accounting help for controller, CFO. That means you're going into a business that doesn't have a controller or CFO and you're acting as that person. You could advisory, technology consulting, forensics, risk management, strategic planning, wealth management, business valuations. These are all niche, very specific type of services that a CPA firm can offer, but you need experience before you can just start consulting. No one normally starts in consulting. All right, let's go to the other side of the equation, private accounting. This is where you're focusing on one client, which is the company that you are working for. With private accounting, you're going to do the full cycle accounting of that company, which is recognizing revenue, to paying payroll, to accounts payable, to if you have shareholders, equity accounting. It's full cycle going from beginning to end, money coming in, money going out. Big thing with private accounting is month-end close. This is where you're closing the books of the prior month and pulling the financial statements together. This is going to be recognizing revenue, recording all expenses. You're going to reconcile bank accounts, reconcile balance sheet accounts, book payroll estimates, accruals, all that good stuff. And depending on the size of your company, you might be preparing department and business unit P&Ls. Small company, you're not going to be doing that. Mid-size, more than likely, large companies are going to have many departments, and you're going to have many different P&Ls tracking the results of those different departments. And if you're a public company, you'll be preparing public reports like an 8K, which is significant events, a 10Q, which is the quarterly filings, and the 10K, which is the annual report. Let's talk quarter end. Quarter end is going to go through the same motions as a month-end close, but with quarter end, and this is not every company, but the ones I've worked at, quarter end is a big time to gauge how the business is performing. This is when the board of directors are normally going to be meeting. This is where you're going to be preparing quarter end reporting, which is generally more involved, detailed, and there's going to be more reports to prepare. And this is when the board of directors and shareholders are going to meet to review the results of the business and how it's doing. There's also related but unrelated quarterly tax filings, quarterly compliance filings, depending what industry you're in. There's a lot of stuff that happens quarterly that might not happen on a monthly basis. Big end of the year close is the year-end close. Similar to month end, similar to quarter end, it's getting everything wrapped up for the year, taking that last look at your accruals, your estimates, and getting the best information that you have in. Ultimately getting everything ready for the annual tax filings, audit prep, or what other year-end requirements that you have for your company. Year-end is definitely more intense than quarter end, and then more intense than a regular month end. Also within private accounting, budgeting and forecasting. This is where you're going to solicit information from business department heads, sales, expense budgets. You're going to be pulling these together. And that could be 1 year, 2 year, 3 year, 5 year. Really depends on how large your company is and how much management is expecting to look at and how realistic is it to look at this information during the budgeting and forecasting process. This can be a monster exercise to undertake as it involves gathering data, setting goals, taking current data to forecast out what those 1, 3, 5 years, whatever the years are, look like. The budget process will involve management. They ultimately want to look at the budget. During the year, you're going to look at your budget to actuals to see where you're lining up from an expense and revenue standpoint, and where you're going off the rails and not maybe managing expenses, or maybe sales were just under what you were budgeting, forecasting for. And then within private accounting, it depends how big the company is, but there's a lot of different positions, a lot of different areas within accounting and finance, especially in large companies. There's financial reporting, general ledger accounting, there's treasury where you're managing the company's cash, accounts receivable, you're collecting money, accounts payable, you're paying the company expenses, payroll, you're paying the employees that work for the company. Financial analysis. Once the month end close is over, you're looking at the results and determining how the business is performing. FP&A, planning, forecasting, and budgeting, kind of what we are just talking about. The budgeting process, monitoring it, doing the forecasting, the strategic plan, looking at all that, and then discussing where things are lining up and where things are not lining up. Tax, you'll have internal tax folks that are working with the external public accountant tax. This is where you're filing tax filings and other compliance requirements. And then if you have equity accountants that are just strictly working on stock. There's a lot of different areas. That is 9 I just covered. That is not even comprehensive. Within a large company, there could be a lot of different areas within accounting that you can end up working in. The larger you are, the more specialties they're going to have. All right, if you've gotten any value out of this video so far, please smash that like button and consider subscribing. All right, let's continue. We're going to talk about the busy seasons. I think this is common that everyone hears that there's a busy season. They assume it's all related to taxes. That is not the case. It is a factor, but is not 100% the cause of a busy season. With public, depending on the size of your firm and the industries and clients that you're working on, you kind of don't know exactly when the busy season is, but generally speaking, first quarter is going to be busy season, especially with calendar year clients. This is when you're going to be gathering all the information for audits. Once the company has wrapped up their year-end close, the auditors are going to be requesting documents. They want the trial balance. They want the supporting documents. They're getting into full audit mode, and that's going to be happening in first quarter for a calendar year company. Tax, going to be running kind of very similar deadlines. Depending on what type of entity you are, it's either going to have a 3/15 or 4/15 deadline. Now, you can extend your returns, but a lot of people, if you're trying to hit those deadlines, that's going to be crunch time to get the tax returns prepared alongside with the audited financials. That's why first quarter can be considered busy season for public. Now for private, you're kind of on the same trajectory, same timeline. Private, you have the month end closes. The first week of the month when you're closing the books is busy. Quarter end, it's going to get busier because you have more requirements, you have more reporting that you need to provide. Year end, this is your last chance to get your numbers aligned with accruals and estimates and make sure you feel good about the numbers that you're providing for the audit, for tax, and for management. If you look at it, private has to get done what they need to get done first to then give the information to public. Private's going to have a little bit of a busy season earlier than public, but public is working with private, so it's everyone's busy in first quarter, or if you're a calendar year company, because private's closing books, getting the annual close done. Public's then coming in with the audit and the tax information, and then they're requesting information, and then you just get back into the cycle of month end close, quarter end close. It's that first quarter is just going to be the busiest time of the year, but that's really industry specific. If you have a fiscal year that doesn't end at 12/31, your busy time might be 6/30. Really depends on your industry, but there will be a busy time for public and private. Let's talk product versus byproduct. And I think some of the private accountants are not going to be happy with what I'm about to say. Public accounting is the product. Public accounting is revenue driving. They're earning the revenue for the services they're providing. There is no other business. You're doing audits, you're doing tax, you're doing consulting. That's what drives revenue. Everyone deeply cares about those engagements and the accounting related to it. It's what drives revenue. You are the product. Now, private, you are the byproduct. And private accounting is really the dashboard of the business. It's not necessarily driving revenue. Now, accounting teams can drive some revenue, but they're not the product. They're not what's being produced. They're not what's being sold. Private accounting is the dashboard of the business, but the sales and the product are the engine. The business dies without sales. Accounting will never be viewed as highly as sales, in my opinion, from a business standpoint. Sales come first. That doesn't mean accounting isn't super important. It is, especially the larger you get, the more important accounting becomes. The data and the results are critical for the business to monitor and how the business is performing. The larger the company is, the more important the accounting becomes, in my opinion. But there is a difference. Public accounting, you are the product. You are generating the revenue. Private accounting, you are the byproduct. You're keeping track of the revenue. All right, let's talk long-term careers. And I'm not going to go into great detail here. I just want to lay out the general trajectory of someone who sticks with either public or private accounting. So public, the general trajectory, you start off as a staff accountant. You work a couple years, superstar, 1 year, and you move into senior. Senior accountant then becomes either a supervisor or a manager. And then ultimately, you want to get to the partner level where you actually have ownership in the CPA firm. From there, a partner can gain greater equity interest in the CPA firm and ultimately become part of the leadership or the board of directors of a CPA firm. That is the general trajectory if your ambitions are to become a owner, a partner in a CPA firm. Now, private's going to look a little different. Private, a lot more variables in my opinion, but private, start off as a staff accountant, work your way up to senior, manager, very similar kind of alongside of what public looks like. Now, this is where things kind of take a little bit of a change. The next roll up, in my opinion, would be assistant controller, and then controller, where you're overseeing the entire month-end close, quarter-end close process. From controller, then you can move up into the CFO role, which has a different skill set than a controller. A controller is going to be looking over the entire accounting process. CFO, you're getting involved in a lot more than the accounting. But I just want to note that there is not just one evolution to public and private. This is kind of just the general trajectory. If you go into either industry, if you want to advance within your career, that's the ladder that you will be climbing in either side of the equation. Let's talk compensation. You'll read all types of reviews online on what pays what. Private pays better, public pays better. I think a staff accountant coming into either is going to get paid about the same. You really need to look at what firm, how large it is, what industry you're getting into. There'll be some variation there, but a staff accountant, depending on what area you're in, are going to get paid about the same coming out of college. I'd say the most important aspects are building the foundation in your early career. And you want to ultimately, once you build those foundations, you want to start building the intangibles, the leadership skills, navigating internal politics on the board of directors, communication, ideas, running a team, and ultimately driving results. If you can become a subject matter expert while developing solid intangible, the sky is the limit. You're really, no matter which direction you're going, public or private, you're going to be highly sought after. That's a long way for me to say it's impossible for me to give you which side of the equation pays better. It really depends on you and the opportunities that present themselves in your career journey. Look for the right opportunity for which may be money or it might be work-life balance. Heck, maybe you can pull off both. But it's really up to you and your long-term goals and where you want to go with your career. Private and public are great opportunities no matter which way you go. All right, my opinion, which one is better? It's really, both are great options, public or private. You can have great long-term careers, make a lot of money in either direction. It really depends. Do you like working for one business, supporting that business, helping them reach their goals? Or do you like working on multiple clients, helping them reach their goals, getting their tax, their audit, whatever they need from you, and the product, your revenue driving, versus private, where you're not generating any revenue, you're part of the overall machine. The traditional model is get a couple years of public accounting experience, build your foundations working on various different clients and industries, then pick a direction, get into a private industry. If there's a specific industry that you want to get in, or maybe there's just the opportunity that presents itself, get into the private industry and work your way up within the private company. You might have to jump into another company depending on the size and what your ultimate goals are. But that has been the traditional trajectory. Get a couple years of public, then move to private. Now, I'm not saying that's the right thing to do. There's no right or wrong way of doing this. There's nothing wrong in doing a full public accounting career where you make partner. That is a great opportunity. Now, the only thing I could say that private industry has a slight advantage from a compensation model, if you land the right opportunity, is if you land in a company that offers equity or stock options, and you land in a period of time where they're going through some major growth, or you get into a startup that ends up growing like crazy. If you can obtain equity and stock options, especially in the early evolution of a company's growth, that can be a long-term differentiator from a compensation standpoint. If you work for a company if that company goes public or ends up selling at a premium, the financial upside can be extremely rewarding. You won't get that in public accounting. You can become partner. That's very rewarding. You can make a lot of money doing that. If you land in a growth company, get some equity, and it goes public, it's hard to compete with that. Ask any early Microsoft or Amazon employee. You won't necessarily get that opportunity from public accounting. And that's why I think you got to look at the opportunity. And that's what private accounting might have a slight edge if you land in a growth company that offers you equity or stock options. That's the only edge, I'm going to put out there related to public versus private. Well, I hope you learned something from this. This is a lot to go through between public and private accounting. You can see the differences between the two. Ultimately, they're both great careers to get into. I highly recommend both of them. Thank you for watching. I will see you in the next video. Take care and goodbye.